Have you ever wondered if small weekly investments can really change your financial future? Most people think investing requires thousands of dollars to get started, but the truth is, you don't need a lot of money. What you need is consistency, patience, and the right investment. In this video, we're going to explore a simple question. What happens if you invest just $25 a week into SPY? SPY is one of the most popular investments in the world. Millions of investors use it as the foundation of their portfolios. But why? Today, we're going to break everything down step by step. We will cover what SPY actually is, why SPY is important, how SPY compares to the S&P 500, why long-term investors choose SPY, real examples of how your money could grow, and how small weekly contributions can turn into serious wealth. By the end of this video, you'll understand exactly how powerful consistent investing can be. And most importantly, you'll see how even an ordinary person starting with only $25 a week can build real financial security over time. So grab a seat, relax, and let's dive into the world of SPY investing. What is SPY and why is it important? Let's start with the basics. What exactly is SPY? SPY is the ticker symbol for the SPDR S&P 500 ETF Trust. It is an exchange-traded fund that tracks the performance of the S&P 500 index. In simple terms, when you buy SPY, you are investing in the 500 largest companies in the United States. Instead of picking individual stocks like Apple, Microsoft, Amazon, or Tesla, SPY lets you own a small piece of all of them at once. This makes SPY one of the easiest and safest ways to invest in the overall U.S. stock market. So why is SPY so important? Because it gives everyday investors access to instant diversification, low-cost investing, long-term growth, professional management exposure to America's strongest companies. Rather than betting on one company, SPY spreads your money across hundreds of businesses in different industries. That reduces risk and increases stability. For many investors, SPY is considered the backbone of a long-term portfolio. It is simple, reliable, and proven over decades.
SPY and the S&P 500 are closely linked but not identical. The S&P 500 is an index representing 500 major U.S. companies, while SPY is an ETF that tracks this index. Essentially, when you invest in SPY, you're investing in the performance of the S&P 500. Launched in 1993, SPY was the first ETF to track this index and has since become one of the largest and most traded ETFs globally. Investing in SPY provides a straightforward way for individuals to gain exposure to the overall U.S. stock market without needing to buy shares of each individual company. Why should you invest in SPY? There are many reasons why investors choose SPY. First, it is simple. You don't need to be a stock market expert. You don't need to analyze companies. You don't need to worry about picking winners and losers. SPY does all of that for you. Second, it is diversified. Instead of putting all your money into one stock, SPY spreads your investment across 500 different companies. That reduces the risk of losing money from a single bad investment. Third, it has a long history of growth. Over decades, the U.S. stock market has consistently gone up, and SPY captures that growth automatically. Fourth, it is low cost. SPY has very low fees compared to mutual funds or actively managed investments. And finally, it is perfect for long-term investors. If your goal is to build wealth slowly over time, SPY is one of the best tools available. SPY growth rates. Let's look at how SPY has actually performed over time. Here are the real historical growth rates. 3-year growth rate, 21.84%. 5-year growth rate, 14.55%. 10-year growth rate, 15.81%. These numbers show something very important. Over long periods, SPY has delivered strong and consistent returns. Even though the market goes up and down in the short term, the long-term trend has historically been upward. That is why SPY is considered a powerful investment for retirement and wealth building. Instead of guessing which stock will do well, you simply invest in the entire market and let time do the work. How much capital you invest. Over time. Now let's look at something simple. How much money you actually put in if you invest $25 a week. Your total contributions would be 1 year, $1,300, 5 years, $6,500, 10 years, $13,000, 15 years, $19,500, 20 years, $26,000, 25 years, $32,500, 30 years, $39,000. These are just the amounts you physically invest out of pocket. But the real magic happens when growth is added. Let's take a closer look at that next. $25 a week investment growth example. If you invest $25 a week into SPY, here is how your money could grow. Yearly contribution, $1,300. After 5 years, invested $6,525 grows to $9,557. After 10 years, invested $13,025 grows to $26,642. After 15 years, invested $19,525 grows to $54,608. After 20 years, invested $26,025 grows to $92,671. After 25 years, invested $32,525 grows to $134,116. After 30 years, invested $39,025 grows to $178,330. Think about that. You only personally put in about $39,000 over 30 years, but thanks to compound growth, it turns into nearly $180,000. That is the power of long-term investing. $50 a week investment. Now let's double the contribution to $50 a week. 5 years, invested $13,050 grows to $19,115. 10 years, invested $26,050 grows to $53,284. 15 years, invested $39,050 grows to $109,216. 20 years, invested $52,050 grows to $185,343. 25 years, invested $65,050 grows to $268,232. 30 years, invested $78,050 grows to $356,661. Just by saving an extra $25 a week, the results become dramatically larger. $100 a week investment. At $100 a week, 5 years grows to $38,230. 10 years grows to $106,568. 15 years grows to $218,433. 20 years grows to $370,687. 25 years grows to $536,464. 30 years grows to $713,322. Now we are talking about real life-changing money. What if you make a higher contribution? The pattern continues as you invest more. $150 a week. 30 years. $1,069,983. $200 a week. 30 years. $1,426,644. $250 a week. 30 years. $1,783,305. $300 a week. 30 years. $2,139,966. This shows a powerful truth. The more you invest and the longer you stay consistent, the more wealth you build. Why time matters more than timing. The key lesson from all these numbers is simple. You don't need to be rich to get rich. You just need consistency, patience, discipline, and time. Trying to time the market is hard, but investing regularly into SPY removes the guesswork. Small amounts add up, and compound interest does the heavy lifting. Disclaimer. This video is for educational and informational purposes only and should not be considered financial advice. I am not a financial advisor. The examples and opinions shared in this video are based on personal research and experience. Investing involves risk, and past performance does not guarantee future results. Always do your own research or consult with a licensed financial professional before making any investment decisions. Conclusion. So what is the final takeaway? Yes, you really can start with just $25 a week and build serious wealth over time using SPY. The important part is to start early and stay consistent. And if you are able to increase your investment to $50, $100, or more, your results can become even more powerful. In the next video, we will explore other ETFs like QQQ, VOO, VIG, VGT, SMH, and many more. We will compare them side by side and see which ETFs can help you reach your financial goals the fastest. If you enjoyed this video and want to see more like it, please like and subscribe to the channel. Thank you so much for watching, and I'll see you in the next video.